higher by 114 points, up a quarter of a percent. The S&P 500 up 13.5 points, up 0.21%. The NASDAQ up 0.45%. The Russell up 0.12%. The VIX was also up 0.33% to 15.25. This week we'll get the inflation data on Wednesday before the market opens on September 10th. We'll get the producer price index, which is wholesale inflation. It did surge with their last report, jumping to by the most in the last 3 years. Had the largest jump on Thursday before the market opens, September 11th. We will get the consumer price index. The headline number is supposed to come in at 2.9, previously 2.7. The core is supposed to hold steady at 3.1%. If inflation comes in hotter, that can create concerns that the Fed may not go through with a September cut. At the week jobs report, increasing the odds now of a quarter point cut, 88.2%, and 11.8% that we get 50 basis points. Probability, no chance we don't get a cut ahead of the inflation data. We didn't get a sell-off in August. The S&P 500 is no longer following the post-election seasonal cycle. If we look at the long-term seasonality, going back nearly 100 years, it seems to be correct with a rally into July, going sideways slightly higher into August, peaking in September, and then dropping. The line right here is the peak, which, based on nearly 100 years of data, is on September 6th. September 6th was a Saturday this week, meaning based on the long-term seasonality, which looks to be correct, based on the long-term seasonality suggesting we'll have a September sell-off because we didn't get one in July and August. 2023 and 2024, we had that July sell-off. We didn't get it in 2025. We're going to get a bigger sell-off in September, which tends to be the worst month of the year for the S&P 500. But it's suggesting that we're going to see a peak on or around September 6th, and it's going to be followed by a sell-off. The post-election seasonality was suggesting we'd see a sell-off in August. We did not see that happen. We went sideways, as the seasonality here suggested, suggesting that we see a top around September 6th historically. Friday was September 5th. We had the jobs report with the gap and trap so far, but it's suggesting we're going to likely see, or we have a good chance of seeing, based on the seasonality, of seeing a peak last week with the jobs report or at some point this week with the inflation data. That's what this is suggesting. The VIX went up to the 200 period, tried to break out. It failed. We sold at the 200 period. We came back down. We filled the gap. We got now a doji candlestick. If the VIX gets back above the 50, the green line there breaks this trend line. Volatility will return to the S&P 500. You've got bullish divergences that are forming on the VIX with the RSI, but it's dropped back below 50 on the RSI and on the MACD and the stochastic. The MACD is got a bullish cross 1 week ago, but it's just hovering right underneath the center line. If it turns up and we see the RSI turn back above 50, then you're going to see a breakout and back above the 50-period moving average. If S&P tries to test the 2023 trend line or the trend line from our recent highs, as I've been showing you, then this trend line here comes into play one more time. Even if that happens, there is a very good chance the long-term seasonality ends up playing out to get an ugly sell-off. The Fed announcement in a week and a half, is a rate cut already priced in, or is there disappointment at the Fed meeting? We'll be watching to see what happens this week with the inflation data. As we slammed up into the trend line last week in the weekly time frame from the 2022 high, and we're doing it again this week. We've been doing it straddling along that trend line. We've got the stochastic rolling over last week and continuing to have the rollover this week with a divergence in place in the weekly time frame. So watching this trend line, we're slamming into it again. We're still under the one from the 2023 level, but we're slamming into this one over the last several weeks, and now we've got this divergence here that completed last week. We'll see if that begins to play out. We had price just under the 2023 trend line in the weekly time frame. I've been showing that trend line to you in the daily time frame. You can see we're just directly under it in that daily time frame. Continue at the extremes here in our log scaling to have that divergence with the NAAIM exposure index is what we've seen, a divergence or or just an extreme at the highs for pullbacks or reversals. Inside day today in the candle, a candle of indecision. If it moves higher, we still have this trend line here from these recent highs right here in a possible ending diagonal and the 2023 trend line. If we have a legitimate breakout, there's major resistance here to clear the mid-August peak. You have to get confirmation and a follow through. Here we couldn't get it. We had a breakout. It was a fake out. Here we got a breakout. No confirmation. We pull back, couldn't close above that. You need a confirmation where you close above this high. You close above this high. We didn't do it again today, and then you get a follow through. But if we do that, you've got the Bollinger Band, which we got rejection off of at Friday. You got this trend line. You've got major resistance from the 2023 trend line, and you've got a quadruple negative divergence that's forming here. If it plays out, we need to see the RSI go below 50. Drop below the 10 and 20 period moving average and take out the momentum cloud. The S&P has moved to a new high with Friday. We still don't have a new high with the NASDAQ 100, and I'll show that to you. But before I leave this chart, I just wanted to show you the stochastic. It's also forming a multiple point divergence. We can even take it all the way back over here. You have this multiple point divergence that is developing just like on the RSI. S&P has been in this kind of sideways trading range, drifting slightly higher, where the NASDAQ has made a lower high, at least so far, not joining the S&P. They do sometimes diverge at turning points. NASDAQ got a black candlestick on Friday. Today we get possible gravestone doji. It could be an inside day, though. Confirmation would need to be above the 2 days trading range and then to above these levels. If we go higher, you got your upper Bollinger Band, you've got major resistance directly overhead and our previous peak over here back when we peaked on August 13th. Going sideways, again, we peaked over here, we're getting a lower high. S&P moved slightly above the August 15th peak. Possible divergence between the two, they sometimes diverge. We've got the moving averages getting a bearish cross. Price got above the moving averages, just above our 78.6 Fibonacci from this decline at 4.28%. Signals are mixed with NASDAQ because we're going sideways. Some are positive, some are negative. S&P signals remain bullish. We had a gap and trap on the intraday charts with the jobs report. We gapped higher and then we turned down. Right now, so far, we've got a lower high. And we've got a candle of indecision in the daily time frame in the form of a spinning topper doji, the S&P, and a possible gravestone doji on the NASDAQ here in these daily time frames. But the doji formed on the S&P or spinning top. We gapped higher for the session, went higher, came back down, attempted to fill that gap right there, and then we bounced off the 200 period, did it again right here, and we just stalled right there. And that gave us that candle of indecision in the daily time frame. Losing the 200 would be bearish. Bouncing above it and getting above this high would open the door to go back and challenge this high. There's major resistance directly above S&P from the 2023 trend line and the trend line from the July peak right here, July 31st, and August 15th peak. That's major resistance, and our Bollinger Band is right there. We've stalled at the trend line from the 2023 low. I've talked about this again on July 31st and August 15th. We moved to a new high on August 28th, but we failed to reach that trend line. We still may attempt to do it here. Again, if we reach the trend line, act as resistance, it'd likely be followed by a push back below this trend line. We tried to take this trend line out on an intraday basis. We closed right at it there. At the start of last week, our short trading week, we got the bottoming tail. We rebounded back up. We filled the gap, and here we are. So do we go hit the blue trend line, or do we fail to reach it like we did over here, and we bust the red trend line? But again, there's major resistance directly overhead. Do we rally with the inflation data, slam into resistance, and then turn? Or fail to reach it? Possible bullish inside day that might take us there with our doji spinning top candlestick. In order to off, we've got to break this trend line from these previous lows. And right here, you couldn't do it. You closed right at that level. You got to do that in order to have a sell-off. My signals remain bullish. We've been going sideways, slightly drifting higher, slamming into this trend line a couple of times. There's that gap and trap on the 15-minute chart. We sold off with the jobs report. We tried to bounce off the 200 here in the 15-minute time frame. The 50 got back above the 200 period, and we rallied up so far, got a lower high, and that's given us a candle of indecision on the daily chart. We rallied into this trend line right here, and that broke, and we stalled there, came back to this trend line and slightly breached it. We're resting on the 50 in the cloud. You break that, you've got the 200 down here, you bounce off of this level, and you've got resistance right there and this high over here, which make up the resistance zone. This dotted blue line right here is the August 15th peak, and this line right here is the August 28th peak, and we're just slightly under that right now, resting right here where we were on August 15th. If we have a peak, we got to get a lower high and then get a lower low and come back and take this level out. If signals remain bullish, we can hit the 2023 trend line, and this trend line from the previous highs. I've excluded the shadow here, again, directly above the upper Bollinger Band, which we got rejection at on Friday. The S&P has multiple point divergences in the daily and the 60-minute time frame. If we go up and hit that upper trend line, it may not be done yet, but we have multiple point divergences, possible ending diagonal. I have to take out the 10 and 20 period in the daily time frame and the 50 and the 200 here in the 60-minute time frame to correct. Nvidia is still holding under the 50 period moving average. We tried to rally and it fizzled out. If we can get a bigger rally to the 10 and 20 as they move down to try to cross the 50, it might help the NASDAQ. But if we go lower or continue to struggle at the 50 here with Nvidia, then again, that might cause the NASDAQ to continue to struggle. NASDAQ's tried to rebound back up. Nvidia's not. Again, the NASDAQ's likely going to follow Nvidia's lead. Again, we're probably headed back towards the 150 area to 140 area towards our 200 period moving average on Nvidia. If we try to bounce to fill the gap or move to the moving averages, we'll see what that does to the NASDAQ. We've had a pretty good sell-off from the August peak. Nvidia was up 0.77% today. It got a hammer on Friday. Their topping tail or an inverted hammer back-to-back bullish candlesticks. If we try to come back and fill the gap here and move towards the 10 and 20 as they make their way down to the 50. We've had a pretty good sell-off here since the lower high set up, testing this peak just slightly under it. We got the long-legged doji that got confirmed in a follow-through since that long-legged doji from that peak. We've now dropped about 11.25%. Getting a bottoming tail on Friday. So do we attempt to recover towards the moving averages? The cloud, the momentum cloud, the moving averages, they are resistance. We're continuing to hold it below the 50. We had a little bear flag pattern break down. Back testing that and going to resume with the topping tail here, or is it inverted hammer, back-to-back bullish candlesticks, and we attempt a bigger recovery to try to fill the gap and test the 10 and 20 period moving average. If we do, we'll be watching to see what NASDAQ does. Go make a new high, or do we still have a lower high on the NASDAQ 100? The divergence on NASDAQ 100 allowed it to drop up 4.28%. It's rebounded back up and it's going sideways. Rally to the weekly trend line. You have this trend line as well right here, which forming a massive broadening formation. If we can't make a new high, likely headed back to this level here of support or beyond it towards the 200 period. You have a massive broadening formation in play.